Okay, welcome to the Swing Trading with Slash channel on crude oil today, and we're going to look at associated stocks, something like 10 to 12 of them, and some ETFs as well. And this is December 13th. It is the evening of the CPI print. So we had the CPI print this morning at 8:30 a.m., and it was a surprise to the downside. It was just to say less inflation than was expected. And the markets rallied at first and then pulled back pretty hard. We are going to focus on oil here specifically, but that broader context is important. And so if you just take a look at the links in the description, you can see the previous video just to kind of orient yourself if you haven't seen that one. But we talked about the fact that, and we'll start with the daily chart. This is WTI, West Texas Intermediate, crude oil. So again, it is the evening of December 13th. And so that's a Tuesday night. And so this is what our Tuesday candle looked like, this thing here, right? So as I said, the market pulled back as a whole. Oil did the same thing. And because it's the evening, we've started trading. And right now we have a little red day to start the trading day, which is going to end up being the Wednesday candle. You can see it's just an inside candle, right? It's inside the range from the previous day. And I'll get rid of these lines. This is from previous analysis you'll see in the last video. And you can see that same notion of an inside day was the idea here, that we opened inside this candle, but then we pushed higher. So to be clear, that was a swing low once we moved above this high here, right? Because this candle marked the low, and once we move above the high, that's a swing low, that's bullish. So that marks, and we also talked about this idea that, and that's why I have this numbered this way. You have this swing low, which is very likely our daily cycle low. So meaning this whole thing was 45 days, topped out on day 30. But as we talked about multiple times, really it was a bearish double top really. And so then we topped out on day 30, and then we cascaded lower for 15 days. Then we had this feeble bounce for 3 days, and then we've come down and started and resumed the downtrend, made a low below that low. But now we're trying to bounce again, right? And so you're going to see, some people are calling, oh, well, maybe this bounce could have been the daily cycle low. And you can be open to that, right? This is after this low on day 45. So an easy way to think about it is this is either day 9 of a new daily cycle, this low here, or it's actually just day 50, right? Look, well, I should say, yeah, right. This is either a new daily cycle that is on day 9, or this was your daily cycle on, call it day 54, right? Which would mean these two, this is day 1 and this is day 2, and what we're opening is day 3. I mention all these scenarios, just that's the whole idea, right? You're thinking about probabilities, what is most likely. It doesn't really matter as much though, because again, price action is preeminent. And right now we're making lower lows. I mean, you can see that this low is lower than this, or I should say this low is lower than this low is lower than that one. And so are we going to be able to reverse that? That can't happen until we get above 83.20. I mean, you can see it on this chart, right? Let me just draw the lines just so that it's clear. I hope that helps, right? So we came down, boom, boom, made this low, then made this high. Made this low. Oh, that's a higher high. Faked people out a little bit. And then we made this big low. So where do we need to come up to make a higher high? We got to go all the way up here. Think about that for a sec. And I mentioned this on Twitter, this idea that this is a poor risk adjusted trade, in the sense that you have to go so much higher just to confirm that you're now reversing the downtrend, that once you make that move, you've already moved so much, right? It's like, well, haven't I missed a lot of it? And obviously maybe you haven't. It can be the case that a poor risk reward trade works out. Low probability events happen. But right now, this doesn't look great. The fact that we got this pullback here, obviously not awesome, but that did happen for the whole market, to be fair. And we're going to walk through each of the stocks, see their price targets, kind of do a similar thing. And that's the other thing that I guess is important to also mention, is that for the energy stocks like the XLE ETF or the individual stocks, it is quite clear that they are making a daily cycle low around, like basically around this same time. In some cases, it's maybe a day early. So it's interesting, right? Because like this low did not correspond with the energy stocks at all. They just kept cascading lower. And so there is some credence there to the idea that maybe this is a low on day 54. But again, it doesn't really matter, because if this is a low on day 54, you could still see a scenario, and most likely you will still see a scenario where we just get an early high, right? So this is day 1. This is day 3 we're starting. Maybe we rise for day 4, day 5, and then we roll over, right? That said, tomorrow is the FOMC meeting, the last FOMC meeting of 2022. So that's obviously going to be fireworks. Now, the weekly chart, it is, so this is what the implications for the weekly chart are, that the idea that if this is your daily cycle low, then maybe this is also your weekly cycle low. And so instead of this being your weekly cycle low on week 24, this is actually your weekly cycle low on, let's call it week 35, right? In that ballpark. Also possible that this is a new weekly cycle. That was week 6 and the top, and this is only week 11. And as we talked about on the previous videos, this downtrend here, we say, what if that just, that was not what I meant to draw. Like something like that. Oop. Yeah, it like glitched out on me there. Something like that. Yeah, I don't know. My mouse is kind of playing tricks on me. So, but you get the idea, right? That like you start to make lower lows and lower highs. So tomorrow, FOMC, this is obviously going to react just like the rest of the market. So we're going to have to watch it. But look at this structure here. This is just on the lower end of the range. And we know it's pulling back just based on the candle that just opened today, right? This is your weekly chart. And so this is just not looking great right now. But the levels are really clear. I mean, look at this. If I just move this line here, right? Look at this, like these wicks. It's like price tried to go above and just could not and failed. So that's going to be an important zone in the low 80s, like 81, 82, 83. It's going to be really important. Obviously, again, we're sitting here at 75, and it's that notion, wow, you got to get all the way up to 80 even to start making a case that you're starting to be bullish. That's not a good risk reward. And finally, the monthly chart, really, really, really important. Where did we open the month, right? That's an important thing to always be aware of. Opening price, $80.39. Notice it's all triangulating, right? So what that means is if we opened at $80.39, we need to get back above $80.39 to get green, right? This is a red candle. That's the most basic thing. When people ask about like, oh, can you take a look at this chart for me? Or like the first thing that you can ever do with a chart, go to a higher time frame. What color is the candle? In this case, it's red. I mean, my God, this is a textbook downtrend. I don't know how much clearer I can be about it, right? Like that, and that, right? And maybe we do something like that, but then that, right? So this has to get to 80, just above 80 to get green. And then after that, we need to see it make a higher high. And how does it make a higher high? Well, in this case, it would have to get above the high of November. And you can see, right? The high of November is $93.73. So not only would you need to get to 80, you'd need to then get another $13 above. I don't mean to belabor the point here, but that's the way that you think about a trade. How likely is it for that string of things to happen, right? For us to get above 80, and then we're going to get above 93. Now, certainly it could materialize in the coming weeks, and we eventually make that happen. Yet at the same time, there are thousands of other stocks and ETFs with better risk rewards that you can actually trade pretty freely, right? And so that's the beauty of being able to do this kind of analysis, that sometimes the most important thing it can tell you is what to stay away from, right? So let's look through some of these individual names. So VLO, Valero, so you can see, right, so today was day 2. So it's the same count actually, because tomorrow will be day 3. We're not trading yet, so because it's a it doesn't trade overnight, obviously. like oil does. And so, but this is not a good sign that this is red, right? And so, what you would expect, let's just like play out a little quick scenario, right? Like, let's say that this daily cycle lasts for, because basically we did this, that, that, and then maybe we do something like that, and then we begin another move lower, right? And because this is day 2, day 3, like imagine we can get a top on day 5, 6, and then start moving lower. In this case, this rally lasted, let's see how many days. Yeah, so an unusually long rally at 41 days. So now you're going to ask yourself, this is probably not going to go for 41 days. How long does it go before it rolls over? And does it break this low? I suspect the answer to those questions is not too long. And yes, it does break this low, right? So that's Valero. And you also think about what that means for the weekly cycle. This weekly cycle decline just started here, right? Like, is it really going to be over after just this? This is just a inside candle so far. So in this case, a break above 128.50 would invalidate the bearish scenario. That's obviously a big move from here because we're at 120, right? Let's look at XLE itself, the ETF. That will kind of harbinge, that will give us a sense of the direction of most of the stocks. And so similar kind of idea, closed red, although this is more of this is a doji more than anything. But also observe there's a gap here, right? And I suspect this gap is going to get filled. Doesn't mean it'll get filled tomorrow, but at some point it will get filled down to like the $85 area, which is $1.50 below the low from here, let alone where we kind of closed. Again, same kind of idea. Can this make a higher high and keep the daily cycle going? It might. More likely, we roll over sooner. And you really need to get above this candle at 91.56. But looks like this thing has a date with 80. XOP, bigger ETFs. Again, same kind of idea. Also closed red. So basically tomorrow, December 14th, is going to be day 3 for most of these energy stocks. And they're, in general terms, they're on the inside. There are inside candles on the weekly, red on the monthly. These are not good things, folks. That's Exxon. So we talked, yeah, right. We talked about, well, right, maybe this next candle will be something like that. Now, clearly, oh, that's right. That's right. Like, you could see a world where we just continue to bleed lower, close there, consolidate, and then next week is the whammy candle. We'll see. But again, same. Oh, so actually, no, Exxon is a little different. That's interesting. That's always good to point out when there is differentiation. So for Exxon, the swing low actually came on December 7th. So we did not make a lower low. We kind of consolidated above it. So 1, 2, 3. So Tuesday was day 4, and Wednesday will be day 5. So that's always good to just kind of observe something that's like bucking the trend almost in a way. But so Exxon would still need to get above 111.36 on a weekly chart. That would get it above this big down weekly candle, because you almost kind of think about it, this big down weekly candle is what is kind of getting the party started in terms of the downtrend, right? It's like, okay, boom, that's our big leg. This becomes your consolidation, and then whammy candle. And maybe it doesn't happen next week, right? You could even have another consolidation candle sort of week, like, easily, something like that, maybe even. And then your whammy candle. PSX, Phillips 66, all the same idea. Wow, this is a weekly chart. And you can see big upper wick, and that means there was a pullback on the daily. Oof, oh my God. Right, so we gapped up, and then we just filled the gap. Well, let me just make sure. Like, you see, we know that because we know this candle opened right here. Right above the 10-period moving average, actually. Interesting. Which is sloping lower. And then it just like fill the gap. So so near-term bounce seems likely, but that's not a good sign. I mean, think about, like, you always want to be thinking about like what this looks like structurally. And structurally, This, my friends, looks like it just made a lower high like that, right? Like, and then you expect a lower low after that, right? So it doesn't mean it will play out that way. These patterns can fail, but statistically speaking, better, more likely. Because think about it, where is this next candle open, right? Like, that's pretty clear that, and we've seen examples where next candle could open here, right? Which would be crazy. And that's what you have happen when you have like a CPI print at 8:30, right? So you can have a big gap up, which is what we actually did have today. More likely though that tomorrow's candle is going to open like somewhere like right there, right? Like right there. Doesn't mean it's going to be, yeah, it's going to be like that maybe, and then it'll just expand like, oh, and then you can just kind of droop lower. The point though is that, and you can see a world where this thing continues to rally a little bit because, well, yeah, right. Because this is your weekly cycle decline. Let's look at, I mean, this is Phillips 66 specifically, right? We topped out here on November 20th. Yeah. So that's interesting. We could be starting a new weekly cycle, which is itself going to be bearish, which obviously would be really bearish. That's an important concept to understand. And, oh, OIH, that is something that is bucking the trend a little bit here, right? So most things are red today. OIH is very green. It actually pulled back very little from the highs. That's interesting. Relative strength here. And if we think about the weekly levels, OIH still not looking amazing. Would need to get above 313, and we're down here at 294. So that's still a little tough. Still just an inside candle, but still a little bit stronger. ConocoPhillips. Oh, God. I mean, look at that, how bearish that looks, right? Like, this is like setting up, like the textbook, like what you would see, what you would expect from this next candle or something like that, right? And then, you know, so you can kind of imagine, right? It's like downtrend, right? Like you moved lower, this is becomes your lower high, that's your lower low, and then maybe you bounce a little bit, but that's not good. Devon is the next one on this list, and we've talked about that a lot. That's not looking great. Although you can see there was a pretty big rebound here today, right? So after this lower low, or after this low here, we pulled back very aggressively. So that's interesting. MRO. And again, let's just look at what the daily looks like for, yeah, so same idea for Devon. Potential daily cycle low, day 2. Marathon oil, excuse me. Also day 2. I mean, look at this weekly candle. Hopefully that's clearer to everyone, right? Like, look at this weekly. I mean, look at that long red weekly candle. That's like the way to think about it almost is like, that's like a cliff, right? Now look at these red candles and all of this time it took, right? Like, let's just draw this high here, right? So it took us all these weeks to get back above the high of just one candle of price action. Think about that, right? Same kind of idea here. We're probably going to grind a little bit to get back above at some point. And it's like it causes kind of a chasm. Now, we can always get a big red candle, like, whoop, forget about it. We're just going higher, folks, like that, right? Cool. But how likely is that? What will cause that, right? And finally, Chevron. So same idea, daily chart, day 2 of a new daily cycle. I mean, but man, what a doji indecision candle. And also, we have a gap. And again, gaps tend to get filled, right? So a gap between 170.60 and 172. So about a $2 gap, though. That's interesting to play the short side, potentially. So that's the lay of the land. That's the very specific levels on the individual energy names. Does look like we're going lower, but doesn't have to be the end of the world. And most importantly, if you know the levels, you understand how to watch for the reversals. So thank you for watching.